All right, we are live. Guys, today was a crazy day on the market, right? So just taking a look at the three major indices real quick over here. The Dow Jones was up 2.13%, the S&P was up 2.28%, and the NASDAQ up a whopping 2.5% for the day. And while my portfolio did not beat the market, it still was up quite a bit as well. I was up about 1.8% for a gain of $750, which puts my portfolio just under $43,000. And in today's video, in tonight's live stream, I should say, I'm going to be sharing with you the top 5 stocks in my portfolio today, the 5 stocks that performed the best. But before we get into that, I want to welcome you guys to the first Dividend Happy Hour of 2023. And we're going to kick it off with a cheers. I'm actually sipping a little margarita tonight, which is something I have not done for quite a while, but we're back, guys. Red, white, and me with the margarita. So cheers to you guys. Thank you so much for tuning in tonight. And here's to a great way to end the first trading week of 2023. So cheers. Okay. Now with that, I want to hear from you guys a couple things, 3 things actually. Number one, how up was your portfolio today? Because I'm assuming that we pretty much all made money today. So number one, how up were you today? Number two, what did you buy this week? Okay, did you pick up any stocks in your portfolios? And number 3, what are you drinking for the Dividend Happy Hour? Let me know those 3 things in the live chat or in the comments below if you're watching the replay. I want to go through some of these comments and just say what's up to all you guys who are tuning in tonight. So we got Suzuki Man. What is going on, my friend? Good to see you. Kevin, happy to see you as well. Coyote Sunglasses in the flesh. We've got Kevin. We've got Riaz. We've got, who else? Harris is in here. Steve. Pat. Paolo. Shamir. Who else we got in here? Ron. Good to see you, Ron. We got Expat John. Nice. Lucas is in here as well. Will. Jay, Jim, Omar, Emmanuel. Guys, thank you so much for tuning in. I'm glad to see all of you guys here tonight. Who else we got? Alfonso, Rick, Kevin Murphy, Todd, Caleb, and I think that's it so far. Oh, Shannon's in here too. So thank you guys all for tuning in. I want to go through now and see what you guys are drinking. It looks like we got Corona. You guys drinking Corona out there. I saw someone mentioning, I think it was Coyote, bringing out the pitcher for pina coladas. I think that would have been a good move. Let's see, what else? Let's see. Go through some more of these comments real quick. And we'll get into the main event in just a moment. And for those of you who are just now joining, it looks like there's 75, 77 of us in the stream right now. Today we're talking about, I'm just going to share with you the top 5 stocks in my portfolio, the best performers for the day, because today was just insane. I'm excited to get into it with you guys. And we're not going to spend too much time doing that either. Just kind of a quick run through, because I'm really excited to get into the Q&A, more so the hangout session in this video. That's, I think, what we all look forward to most, right? So looks like Jim's drinking a Moscato. That's classy. Rick's drinking some raspberry tea. Let's see. Looks like Caleb, a coquito. What is a coquito? I have never heard of that. This right here, let me know. I've never heard of that before. That sounds interesting. Coyote went with the Budweiser. No pina coladas, maybe next week. Oh, Phil's drinking some milk, creamy and delicious. You can't go wrong with a tall, cool glass of milk. Love that. And then Shannon, this is her first time here in the stream. Thank you so much for joining. Glad you could make it tonight. That's awesome. Hope you enjoy it. Who else? What else we got here? Todd's drinking some tea. Let's see. Topo Chico. Ray's drinking some Topo Chico. Excuse me. Shout out Coca-Cola. Jacob with the Corona. Lucas keeping it clean tonight with a little orange juice. Nice. Now let's see how much were you guys up today? Let me see. Go through some of these here. So Suzuki Man up 2.6%, outperformed the market. That's fantastic. Kevin underperformed just a little bit, but still outperformed me with a gain of 2.03%. Bought some more Intel and Lowe's. That's awesome. Let's see here. Jay, wow, Jay really crushed it. Up 3.05% for the day. Bought SCHD, Comcast, and Cisco. Good job, my friend. Good pickups, too. Pat, up 2.6%. Picked up some Altria and Medical Properties Trust. That's fantastic. I mean, we've talked about MPW so much on this channel recently. I think I put out a short on it yesterday, 3 reasons to buy MPW, and that stock can't catch a break in terms of share price, which is just so good for us investors. Which I know is well covered territory with you guys. You guys get it. Kevin up 2.34% 2.34%. Very nice. Bought an opening position in C1, which I think is, correct me if I'm wrong, I think that's Clearway Energy or something like that. Yeah, I looked into that company at one point. It's a utility company, and it looked like a pretty good one last time I remember, or from what I remember. Let's see. Swampy is up 2.75%. Nice. A lot of you guys beat the market today. That's fantastic. Rick bought some more EPD, up just under 2.5%. Oh, and a Coquito is Hispanic eggnog, but way better. Interesting. Okay. Okay, guys. So how about? Oh, we got one more here actually. Up 2.25%. Bought some SCHD, Jeppy, Vici, O, and National Realty Properties. That's nice. Okay, guys. All 103 of you guys, thank you so much for tuning into the stream tonight. How about we get into the main event? We could be going through these comments all night. So, oh, actually, real quick. This is interesting. Yeah, I'll show it right now. Ray wants to know, hey, my birthday is tomorrow. Can you be the stripper? There will be free margaritas. Well, you had me at free margaritas. Count me in. I can't promise that it's going to enhance the party, but you know, at least there's free margaritas, so that's good. So anyway, guys, let's get into the top 5 stocks. Give me 1 second here. Let me switch over to my screen. Okay. So guys, and we're going to go in ascending order. So worst performing to best performing, if that makes sense, the top 5. So kicking it off with this first one, guys, this is one of my favorite stocks of all time, okay? Procter & Gamble, who was up 2.38% for the day. And at the bottom there, you can see that's pretty much my overall Procter & Gamble position. It's one of the biggest holdings in my portfolio, which I'll show you guys momentarily. But right now, after today, it puts me at an 11% gain with Procter & Gamble, up about $350. And if we switch over to my dividend portfolio tracking spreadsheet, which you guys can actually grab for free, there is a link to it in the description of this video. I hope you check it out. It's been a great resource for me, and I know many of you out there. And you know, it's always good. It just helps paint a better picture for your portfolio, just to see where everything's at. But going back over here, guys, taking a look at how my portfolio is diversified. Like I said, Procter & Gamble is one of my biggest positions right now. It makes up about 8.5% of my portfolio, and it wasn't always this way. Okay, actually, it was not too long ago that Procter & Gamble wasn't even in the top 5, but back in December, I invested about $1,000 into Procter & Gamble. You guys might remember if you saw the portfolio update videos or what have you, but it really jumped up, and that was my goal with this position. I really wanted to make it one of my bigger holdings because I think it's just such a secure company. It's such a steady company, stable company. 66 years of dividend growth. You gotta love that. So my 5th best performer was Procter & Gamble, and now moving on to my 4th best performer, surprisingly, 3M, with a gain of 3.06%. And despite what it's done today, 3M is still one of my portfolio's worst performing positions. I'm down about 23.5% with the loss of about $500 so far, but it's okay, guys. We're holding strong, and like Procter & Gamble, 3M is also a dividend king, and I don't remember exactly how many years of dividend growth they have. It's definitely over, I think it's 65 years actually, but showing you a little bit more of my 3M position just as it pertains to my overall portfolio. It's not a big position for me. I only have about 3.5% of my portfolio in 3M, which just based on what's been going on with this stock this last year is fine by me. And it's one that I've chewed on. I've kind of thought about adding more to this position recently just because it is so down. I mean, if we go back here, you know, down, what is that, 23.5%. I mean, it's a great opportunity to average down with 3M right now, but I'm just still so uncertain with what's going on, just with the whole litigation with this company. I actually probably should read more into it and get caught up. I don't even know if there's been any recent news on this, but you know, if things look good, I'd love to add more to this position and bring that average cost per share down, because I think right now it could be a pretty opportune time depending on what happens with that litigation. As far as 3M goes, I'd be hard pressed to believe that this company will cease to exist. I mean, their products are in pretty much everything. I mean, I've got some sticky notes right here, Post-it notes. I don't know if you guys know this. Does it even say it? No, it doesn't say it, but these Post-it notes are made by 3M. I also have, I'll show you, not too far either, some Scotch tape, which is also owned by 3M. And I don't have them here, but I actually have some more Post-it notes. Check this out. But in the other room in my apartment, I've got just a sea of what are they called? What are those things you hang? Gosh, why am I drawing such a blank? I hung up those pictures right there with them. The command strips. Goodness gracious. I've only had a few sips of this margarita. It's also already making me loopy, but got some command strips in the other room. So 3M's pretty much everywhere. It's in more places than you think. But anyway, that was my best or fourth best performing stock today. Moving on to the third, guys. This one is Snap-on, which is one of the highest growth dividend stocks in my portfolio. And as you can see, just for the day, we'll take a look at its dividend stats in just a moment because I want to show you that dividend growth rate. But Snap-on was up 3.2% today, and it's performing pretty well in my portfolio so far. Unfortunately, because I would love to add more to this position. But right now, I'm up exactly 12.5% with Snap-on. And let's see how much of my portfolio is in Snap-on. It's not, it's kind of mid-range as far as weighting goes, about 5%. But I wouldn't have nothing against Snap-on being one of my portfolio's top performing or bigger positions if I could make it one of my core holdings. But if it ends up going, I cannot talk tonight. If it ends up going down in share price, which hopefully this loads, we'll see its share price performance. But if it ends up going down at all in share price and getting at or around my average cost per share, I'll definitely add more, but I don't see that happening anytime soon. I mean, Snap-on's trading it pretty close to the top of its 52-week range, and in the last 6 months, it's done pretty well, up nearly 20%. So it's definitely outperformed the market. And like I said, it's one of my portfolio's highest growth dividend stocks with a 5-year growth rate of about 14.8%. Okay, I think I need to take a sip of water real quick, guys. Sorry. All right. So that's my third best performing stock for the day. My second one, believe it or not, is WP Carey, ticker symbol WPC, who just barely beat Snap-on by a hair, okay? Up 3.21% compared to Snap-on's 3.2%. So it just barely outperformed Snap-on. But anyway, guys, WP Carey is not really a big position in my portfolio, which we'll see in just a moment. But it is a pretty good performer. It's up 16.4%. And recently I thought about selling out of this position, but ultimately, I mean, as you can tell, I decided against that and thought I would just hold on to it. It's got a pretty nice dividend yield. I'll pull up the dividend stats here in just a second. And it's a steady dividend payer. So I don't know. I just thought I'd hold on to it. And just taking a quick look at the dividend stats, 5.5%, one of the higher yielding stocks in my portfolio. It's been growing that dividend for the last 9 years. And I think they've been paying for even longer than that, like 17 years or something. No, I guess not. I guess they've been paying for 9 years straight too. So I don't know. I'm glad to be holding on to it. It's not really, it's just kind of there. I don't know. I don't know how much more I'll add to my WP Carey position, and I still might sell out of it at some point in the future, but I guess I didn't really have any reason not to. But anyway, just showing you where it's at in my portfolio. It is a smaller position, like I said, only 3.25% of my total portfolio, so it's really not that big. And actually just showing you how much income it's generating from my portfolio, it's about the same, 3.76% just in terms of income. So basically what this chart shows is my portfolio breakdown by dividend income. So based on this, Altria Group is my biggest income generator, bringing in nearly 10% of my portfolio's dividend income. WP Carey, 3.76%. So it is still on the lower end there. Okay, so that was my second best performing position. And now, are you guys ready to see my best performer? I want to know, do you guys have any guesses as to what my best performer for the day is? I'd be curious to hear if you guys can get it. I saw someone mention it. I think Harris mentioned it earlier in the live chat. But let me know if you have any guesses real quick. Take a sip of my marg. I see some good guesses so far. Paolo guessed CVX. Alberto guessed Intel. Looks like Suzuki Man and Amadou guessed Starbucks. Ricardo thinks it's AbbVie. Miguel also thinks Intel. Shannon thinks it's Apple. Ivan, AT&T. It's a good guess. Kevin with, I don't know what this stock is. Maybe Starbucks? I'm guessing you meant Starbucks. Ron also thinks Starbucks. Charles, Johnson & Johnson. Okay, Jay, Intel. Lucas, Starbucks. Chris, AT&T. Pat, Intel. Man, you guys, great guesses. So my best performer for the day actually was, let me put it up here for you. It was Intel, okay? Surprisingly, like Intel was up 4.25%, a whopping 4.25% for the day, which is crazy. This might be the biggest gain I've seen with Intel for a long, long time. But nonetheless, Intel is still by far my portfolio's worst performing position. And right now I'm down 35% for an unrealized loss of nearly $1,000. Oh, Kevin, I was reading your comment. Sorry. Sorry, guys. Quick brain fart. But anyway, Intel kind of is a bigger position in my portfolio. I've been averaging down. Actually, not really. Kind of sort of averaging down, I guess, across these last couple months. But still, my average cost is really up there. My average cost, as you guys can see, is $44.29, which is obviously quite a bit higher than where the stock's currently sitting. But anyway, where it's sitting in my portfolio right now, just taking a look at the allocation, where is Intel? So it's not bad, 4.75%, which is fine by me, to be honest with you guys, because this stock is going to take a while to play out, as many of you guys know, just with whatever is going on with Intel. It's probably going to be a couple of years, and across those couple of years before we see anything happening with their big plans, across those last couple of years, I'll probably continue to nibble at it and average down, but I don't feel like I'm in any sort of rush to do so, just because the stock just keeps getting lower and lower. I mean, aside from today, the stock just keeps getting lower and lower, and I would not be surprised if that trend continues. And it'll be very interesting to see what happens come with their next earnings report. And I actually want to go back and over here to Seeking Alpha and see when they're reporting next. So if we type in Intel, we're going to go over to the earnings page here on Seeking Alpha. It looks like actually it's going to be here in a couple weeks at the end of January. So I'll definitely be looking out for that. I'm not going to hold my breath for super great news, and it looks like a lot of analysts are downgrading their earnings revisions for Intel for this upcoming earnings report. So it'll be very interesting to see what happens. But surprisingly, they actually pulled off, they actually beat on both the top and bottom line back in October for their last earnings report. So I guess stranger things have happened, guys. But anyway, those were my top 5 best performing stocks for the day. And now I want to put it back on you guys and ask you, what were some of the best performing stocks in your portfolio today? Now I know a lot of you guys are up. We know how much. I know what you bought, but what were your best performers? I'd be very curious to hear. So let me know in the live chat or in the comments below if you're watching the replay. I'm going to take another sip of my margarita. And before I do, guys, if you're enjoying this live stream so far, it looks like there's 142 of us right now in the video. If you're enjoying watching this so far, please don't forget to hit the thumbs up button on this video. And if you're not already subscribed, it would mean a lot if you subscribe to the channel as well. This channel actually has been growing up. These last couple of months, it's been growing like a weed, and it's so great to see. And with that, I'm very thankful for all of your guys' support so far. It really means a lot, and keep up the great work. I'm just so stoked to see this thing continue to grow and to see our community of dividend investors here continue to expand. So anyway, I'm going to take a sip of my marg. You guys put that in the put your best performers there in the live chat, and we'll go through them real quick. And it doesn't have to be all 5 too if you don't want it. You want to just do your top 3, top 1, however many you want to share. It's good with me. I won't come hunt you down. Except for you, Harris. I might hunt you down. Let's see. Okay. Okay, Chris. Wow. Alti, 18.75%. I don't know this company, but dang, man, that's a pretty solid gain. Looks like Ron Patel, Beatrice has done well. Same with SCCO. I don't know that company, but good for you. Harris, WWE would have been if I pulled the plug on it. Yeah, so Harris texted me earlier saying that they were up, and I think you guys were talking about it before the stream started. WWE was up like 22% or something like that, right? Which is, that's crazy. Shamir says his best performers were mostly Canadian banks and McDonald's. Ron, best today was Broadcom. Very nice. Looks like Phil was up 4.87% with CNQ. Nice. Costco at over 7%. Dang. And then Miguel had a few really good performers. Intel, Target, Apple, GWRS, which I'm not familiar with off the top of my head, and then Stanley Black & Decker. Nice. That's another one that just cannot catch a break. Kevin, Qualcomm was up nearly 6%. That's great, man. Del Bomb, Stag, and Walgreens Boots Alliance. Nice. Dad with an iPad. I like that name. Intel, Bank of America, and Citigroup, but he's also watching SoFi. Cool. Jacob, Franklin Resources up 3.84%. Raheem, Intel with followed closely by HPQ. Nice. Amadou, Intel, Altria, NYCB, I don't know that company, and then Coca-Cola. Thomas, Costco. Gary, top 3. Texas Instruments, MasterCard, and Union Pacific. Very nice, guys. Man. Very nice. And actually, too, I want to go through, so I'll show you guys this thing I have on Seeking Alpha. Let me hide this comment. So here on Seeking Alpha, I've got a watch list. So anytime like I come across a new stock or pretty much all the popular stocks, I just add it to a watch list. And you guys can see it's just a running list of pretty much all the popular dividend stocks out there. I think there's like 70 something stocks on this list right now, but let's see what the top performers were overall today. So if you organize it from top to bottom, Costco, I saw some of you guys mention Costco was your best performer. That's crazy. 7.26%. Lam Research, which is a company you guys should definitely look into, up 6.75%. Broadcom, I know some of you guys said Broadcom was one of your best performers, up 6%. Qualcomm, 5.5%. Texas Instruments, about 5%. MasterCard pumped at 4.7%. Union Pacific, about 4.4%. Man, look at all these guys. There were some really great performing stocks today. Were any stocks down? I'd be curious to see. Okay, so a couple were. Lockheed Martin was down, and then Texas Roadhouse was down just a little bit as well. Okay. What an interesting day. And I know I didn't cover this earlier, but oops. Sorry. I know I didn't cover this earlier, but there has to have been some reason why the market did well. And just when I was texting Harris earlier today, he said that there was, let me actually pull up your text, Harris. And I apologize. I did not have the chance today to really look into it myself, but Harris said, looks like there were, he said there was a Fed meeting today, and it looks like there was slower wage growth, which was the cause of today's rally. Okay. Slower wage growth. Interesting. So, okay, and let's get into some macro stuff here. I'm just trying to put these pieces together. So, why would the market go up so much with news of slower wage growth? And is that what it was? So, stock market up. Okay, so here we go. I'm going to pull up an article from Yahoo Finance. We're just going to scroll through it real quick, guys. And like I said, I'm so sorry I did not have the chance to really read into it myself, but we're going to do it together. So let me pull this article up real quick. Bear with me. Okay. I just want to briefly read through it so I can. Okay, so jobs report spurs big rally. Shows wage growth decelerated last month. Investors perceived Investors perceived this bad news for wage receivers, perceived this release as a sign the Federal Reserve officials may ease their rate hiking campaign. So I'm guessing maybe these bad signals coming out of the market could possibly entice the Fed to pivot and slow down their rate increases to maybe not impact the economy as much. Is that kind of how it works? I'm still trying to get a grasp for all this macro stuff, but just like I said, piecing all this together, that's kind of how I'm thinking it works. Let me know if I'm out to lunch on that, or if that's what it means. Okay, Alberto, lower inflation in services. Okay, Captain Suburbia, yes. More dovish, less hawkish from the Fed, which would be better for the market. That makes sense. Okay, cool. Yeah, some of this macro stuff, guys, this actually brings up a great question. Let me know in the live chat and also in the comments below. How closely do you pay attention to all this stuff? Do you pay attention to a lot of the macro stuff, or do you guys typically tend to ignore it and just focus on investing, just, spend your time researching businesses instead of what's going on a macro level? Do you guys, how much time do you spend, between those two things? Because I know there's some people who do a lot of macro stuff. There's other people, and then there's people on the other end who are like, you know what, I don't even care. I'm just in the business of looking for good businesses, and that's all I care about. So let me know about that. I'm curious to hear your guys' school of thought here. Okay. And then Ivan here says, rates affect borrowing and capital allocation. So when they ease, it means there is more of a runway for growth in general. Okay. And then in regards to my question, actually, before I get to that, Phil here says, I watch Yahoo Finance in the morning to see what's going on for the day. Yeah, man, there was a period of time when I first moved to Vegas, like I'm always up early in the morning, but my morning routine changes. But when I first moved here, that's what I did. I'd come to wake up, pour myself a cup of coffee, sit at my computer right here. I'd put on like CNBC or Yahoo Finance, something over here on. And the good thing about this big screen is I could have multiple things up at once, right? So I'd have, what did I just say? CNBC on at Squawk Box in the morning. I'd have that on, or Yahoo Finance, and then I'd be scrolling through articles on Seeking Alpha or something. While that was playing. So I might want to get back to doing that. That was a fun little routine. And I think if I don't do that, I'll be honest with you guys, it's harder for me to keep up with the market because once the day gets going, like and I'm bad too about like texting back or checking Instagram or Twitter or responding to comments during the day because there's just other things going on. But I feel like I have not, and I was telling Harris this, I was telling Harris this earlier today too. I have not done a good job at all of keeping up with what's been going on in the market, really since like before the holidays, to be honest with you. So I need to get back on it. But I will say, on the other hand, that's one of the good things about this style of investing is you don't need to constantly have your head in the market to know what's going on. Like I think Russ says this all the time. Like if I could and he might have gotten it from like Warren Buffett, but buy stocks that you can walk away from for a year and come back and feel good about them still being intact. I think a lot of the stocks, pretty much all the stocks I can think of in my portfolio are like that. So that's why I maybe don't feel as much pressure to check things every day or track everything to a T every single day in the market. So anyway, so anyway, I want to pull up some of your guys' responses on just macro versus good businesses because there's some good stuff in here. So Phil ignores it. He says the long-term investor doesn't give a crap what's going on. Recessions come and go. That's true. And then Dad with an iPad, does it's 50-50, half macro, half company news, which, nothing wrong with the balance there. And then Chris here kind of says in contrast, I know I skipped a couple comments. I'll go back to him. Kind of in contrast to Phil, Chris says you shouldn't ignore it because it can help you on a day-to-day basis when you're dollar cost averaging on the red days instead of green ones, which does make sense. But then Omar here focuses primarily on good businesses and things that he understands. I like that. Lucas, macro catches my interest, but sometimes I have to take a break from time to time because it makes my head spin. Yeah, I get that, man. And then Will here, he's pretty much 90-10. 10% of his attention goes to macro. 90% goes to just looking at the businesses, which, yeah, that's cool. And then Charles, this is true too. If I pay attention to everything they say, I either buy or sell everything. But you know what, though? Like, the thing is, I don't know. I don't think it hurts to know what's going on just in general in the market, or at least, in the world in general. It helps to know what's going on in the world. Just to stay informed. There's nothing, no harm can come from that for sure. And then for us, dollar cost averaging, maybe it's like, and I know personally, like if I'm buying every single Wednesday, I'm going to buy no matter what the market's doing, whether the market's up or the market's down any given Wednesday. That's just a random day, by the way, in this hypothetical example. I'm still going to buy, like, no matter what's going on in the macro environment. So that's kind of how I look at it. But at the same time, like I said, I like being informed, especially for what I do here, making these videos and talking to you guys. I should be more informed than I am. I think today's a good example, to be honest with you. Dad with an iPad. As long as I inverse Cramer, then I'm good. Yeah. So what's the deal with that? Is there really an ETF that's like the inverse Cramer? I keep hearing about that. And then Professor Joe here says, I focus more on good companies that are good value for the long term. Okay. And so, in general, it seems like most of you guys, you don't, at most, you'll maybe spend 50% of your time on the macro stuff. But more than anything, it sounds like you invest most of your time looking for good businesses, which I think makes sense for just what we're doing here. I don't remember who said it here on the live chat, but if we do have a long-term perspective, whether it goes out 5, 10, 15, 20 years, then maybe what's going on today won't matter as much. But then at the same time, like, it's good to know what's going on, I guess, because you're not, if you didn't and you just, without, second guessing it, just went out and bought WWE today, like, I don't know. Like, I don't know if it's a good day to buy it. So I don't know. Let's see. I'm actually pretty proud of myself too, guys. I am all caught up in the comments here. And I apologize. I don't think I'm going to go back up and scroll through the comments, guys. I really apologize if I missed some of yours, but from earlier in the stream. But I know if I do that, I'm going to end up being 15, 20, 25 minutes behind in this live chat, and I want to stay caught up. So if you guys had questions earlier on in the live chat, I really apologize. But if you wouldn't mind just asking them again or submitting them again, I'll see them here. So real quick, Carlos here says, thoughts on ARCC. General thoughts on ARCC, which is Ares Capital. It's a business development company. This is a great question, by the way. Really like the stock. I don't personally own it. As far as business development companies, I have Main Street Capital Corporation and I have Owl Rock Capital Corporation, ORCC. But ARCC is at the top of the list when it comes to like premier business development companies. I think those are, at least in my mind, those are kind of the top three. Not in any particular order. Main Street, ARCC, ORCC. So, I think if you're going to invest in a business development company, and once again, Carlos, like, just don't take this at do not take this at face value. Obviously, dive deeper into ARCC. Don't take my word on it here, because truthfully, I haven't researched it super, super deep, but I know it's supposed to be a really good business development company. So if you're going to buy one, that's not a bad one to look at. So my man Mark here says, the older you are and closer to retirement, I think you need to look at the macro to ensure your retirement is safe. Maybe in terms of share price, in terms of share price movements, right? Like, that's kind of the context you mean that in? Because it wouldn't have, well, maybe it would, depending on the company, but it shouldn't have much of an impact on, if you're a dividend investor, it shouldn't have much impact on the dividend, just the day-to-day swings in the market. And at that point, I think it makes more sense to spend more time looking at the business on an individual level to know if the dividend is safe, because at least for what a lot of us are doing, right? It's, we're investing for those dividends. We're investing for that cash flow. So the share price returns, I don't want to say they're irrelevant, but especially closer to retirement, they might not be as important as making sure that the income is safe. Okay. SJIM is the short Cramer. LJIM is the long Cramer. Okay, nice. Okay, Omar wants to know your thoughts on UNF. Why am I know I've seen that ticker symbol before, but off the top of my, I don't know if you guys can hear Peanut back there. I don't know it off the top of my head, but let's take a quick look at UNF. Let's go back over to the screen, close out of this, and let's go to UNF. Ooh, there we go. UniFirst Corporation. So this is the first time that I've seen this company. And at a glance, I mean, just in terms of share price performance, it's obviously up in the last year, trading at the top of its 52-week range with a pretty high PE ratio of 26.5. What does this company even do? So they're in the industrial sector, and it looks like they provide workplace uniforms and protective workwear in the US, Europe, and Canada. So internationally, that's good. Interesting. Let's take a quick look at the financials. So that looks good. Nice revenue growth there, right? Definitely going up and to the right. That's what we like to see. Gross profit doing the same. What's their gross profit margin looking like? It's not 612. It's about 30, 21. It's about 30%, 33%, somewhere in there. Pretty consistently across time. Not too shabby. If we scroll down, okay, earnings per share is kind of all over the place. It's okay. Well, we would like to see that going up over time, I suppose. Shares outstanding is pretty steady, not issuing, not really buying back too much. That's fine. The payout ratio, this does appear to be going up over time. If we take a look at this chart right here, and which isn't bad. I mean, it's still in the trailing 12 months. It's only 20%, so that's not bad at all. But at the same time, this is interesting. So bear with me as I try and make sense of this. But this this payout ratio chart and the dividend per share chart look to be pretty identical, which suggests to me, just at a glance, like I said, this is a very surface level evaluation. But at a glance, it looks like maybe the only reason that they're able to increase the dividend is because they're increasing the payout ratio, which would mean that they're not, and that would make sense considering their earnings per share hasn't really grown. In fact, for the last 4 years, it's gone down. So, and like I said, the dividend, it's probably fine for now because their payout ratio is still low, but this is a trend in the payout ratio, or at least this is a correlation between the dividend and the payout ratio that's worth taking into account. Let's look at the balance sheet real quick. Okay, $351 million in cash. Quiche, they got the cheddar. Book value per share is going up. That is nice. And they have negative debt, so that's really good. Okay, that's fantastic. Actually, we really like to see negative net debt. And let's look at the cash flow real quick. See what the cash flow is doing. So negative cash flow in the last 12 months. That's okay. I mean, I've got a couple companies in my portfolio that are doing the same, Intel being one of them. Prior to that, it looks like the free cash flow is going up pretty nicely from 2016 to 2020, seeing pretty steady growth, and it looks like they had a couple speed bumps in 2021 and 2022. So we'll see what happens there. Not the end of the world, but it is something to keep your eye on. And now looking at the dividend stats, my goodness, okay. So low starting yield, that's okay. It can be okay. The payout ratio, like we saw, is pretty dang low still, even though it's gone up. Really nice 5-year growth rate, 51.8% with 5 years of dividend growth. Now let's take a look at the dividend history page. Okay, so they've been paying this dividend for the last 20 years, and it looks like prior to 2018, it was just flat, okay? From 2018 all the way back until really like the late 90s, 1999, it was 4 cents per share. So it looks like they've made some great strides in growing this dividend, though, over these last few years, and let's see what they continue to do. And the PE ratio, although it is on the higher end, 26.5, this is still pretty in line with the 5-year average, only 3.3% higher than that. And if we take a look, I want to see their profitability. We know the gross profit margin right about, mid 30% range. Return on equity is 5%, return on capital is 4%. It's not great. Return on assets 4% as well. So I don't know. And then what have they done? This is the last thing we'll look at. What have they done in relation to the S&P 500? We know that they outperformed it in the last year. This is just a price return. Let's take a look at the total return. Let's take a look across the last 5 years. They've underperformed across the last 5 years, and they haven't done they've underperformed across the last 10 years, but still pretty nice return, 150% across the last 10 years. That's not too bad. So looks like an interesting company. I mean, I don't know, definitely one worth taking a deeper look at for you guys. The valuation doesn't appear to be the best, but seems like a pretty stable company. I do like that they're continuing to grow in sales steadily every year. That's a good sign. Okay. So Ivan wants to know, what do you think of Taiwan Semiconductor Manufacturing Company? Buffett has a major position and others are moving into it as well. TSMC is investing a lot in the US, asking because Intel is moving into the foundry space. Well, Intel's actually been, the thing about Intel, actually, let me get to TSMC first. And this is something, I don't know, I've kind of thought about this, I don't know, too much. I haven't thought about TSMC too much, to be honest with you, but it seems to be a really great company. Now, in the semiconductor manufacturing space, companies can do pretty much one of two things. They can manufacture the chips, which is what TSMC does in Samsung as well, or they can design the chips, which is what AMD and NVIDIA do, and now Apple actually. And so it's usually kind of one or the other. The only company that does both, as far as I know, the only company that does both is Intel. And so what Intel is doing is they're creating more foundries to increase their manufacturing capability. So Intel both designs and manufactures their own chips, but they also manufacture chips for some of these other companies as well. And that's what they're looking to expand. And that's what pretty much their big plan here is based on. If they can expand their manufacturing capabilities here in the United States, maybe they would be able to build that business a bit more. And so in terms of TSMC versus Intel in that space, it seems that so far, Taiwan Semiconductor Manufacturing is able to manufacture more advanced chips than Intel. And we'll see what happens as time goes on. But one thing I will say about Intel that I think is often forgotten, let's actually go back over to the screen, is, and one thing you hear a lot about with Intel is that like all these other companies out there are taking their lunch, they're taking the market share, and that's true. That's true, and that's been the case for the last few years. But if we zoom in, or a handful of years, if we zoom in, even despite this, guys, Intel is still able to grow. Excuse me. Oh, come on. Sorry, guys. If we look at this chart, Intel is still able to grow their sales pretty consistently, at least across the last 10 years, and certainly before that. And the gross profit margin's pretty substantial as well. I mean, right here it's about 50%. Here it's over 50%. Here it's over 50%. So typically they have an over a 50% plus gross profit margin, okay? And they're buying back shares too, which is fantastic. But anyway, long story short, I mean, Intel gets a lot of hate, and I get the hesitation to invest in them right now just because they're making some big moves, and like I said earlier in the video, that's going to take some time, like a number of years, for all that to play out. And it certainly creates some risk with that stock, right? But I also think it's important to remember that Intel's they're still putting up some pretty good numbers, or have been putting up some pretty good numbers despite other companies coming in and taking some of their market share. And I still think that they have the whole industry has a huge tailwind behind it, because it's going to be one that will have increased demand as time goes on, which is going to rise all ships. So, even though TSMC exists and Samsung exists and NVIDIA and AMD exists, I still think just because of Intel being just a legacy company in the space, and also because of the increased demand we'll see in the entire semiconductor industry across, well into the future, there's going to be room for Intel to play still, for sure. So that's my take on the whole thing. I think TSMC is a great company. I still think Intel's a pretty good company. And I think these other companies too, NVIDIA and AMD, seem to be pretty good companies as well. And it seems that there's plenty of space for all of them to operate still. So I'm not that concerned about it. Yeah, I don't know. I understand why people would want to stay away from Intel right now. It makes sense to me. It's definitely like a contrarian move right now, and you're kind of taking a gamble. But we'll see how it plays out, We'll see. I'm very interested to see how it plays out. So, great question, though. And Shannon wants to know here, what brokerages do you recommend for a dividend account and Roth IRA? So that's a really good question. I haven't been asked this in a long time. I'm actually going to screenshot this so I can maybe address it in a newsletter or something. So Shannon, just speaking personally, I have two different portfolios. I've got my main one, which we've been talking about all night, on Charles Schwab, which I've really liked using Charles Schwab. It's not the easiest to use platform. It's not the best looking, but I feel comfortable having my money invested with something like Charles Schwab. It's a legacy brokerage. I feel like it's more safe than something like a Robinhood. So that's a good one. I think Robinhood's also, while we're talking about it, I think Robinhood's also very easy to use. M1 Finance, which is where my second portfolio is at. I have my Roth IRA in M1 Finance. I've really enjoyed using M1 Finance. Which is what I wanted with this Roth IRA. It's extremely set it and forget it. Every single week, my money's automatically transferred into M1 Finance. It's automatically distributed based on the pie. And so I think for my purposes with that, it's worked out very well. Some other good brokerages may be worth considering are like Fidelity Investments. That's supposed to be another really solid legacy brokerage, like a Charles Schwab. TD Ameritrade. A lot of people like TD Ameritrade as well. And there's some other good ones out there too. I'm kind of blanking on others right now. I know a lot of people use Webull. I don't have any experience with it, so I can't speak on it. Yeah, there's some good brokerages out there, but personally, for the long run, and I've seen this too with a lot of people, they'll start with something like Robinhood, and then they'll transfer into M1 Finance, or they'll transfer into Charles Schwab. So if you're just getting started, like Robinhood's not a bad way to go. But from what I've seen with a lot of investors, including myself, actually, I did this as well. A lot of people start with something like Robinhood and then transfer that out into a different brokerage, which is fine. But it just depends what you're looking for. If you're looking for something set it and forget it, I think M1's great. If you're looking for something very easy to use, I think Robinhood's pretty nice. But I also don't think you can go wrong with the legacy brokerages. They're not that they're hard to use at all, like Charles Schwab, Fidelity, TD Ameritrade, but they're just not as pretty as like Robinhood. That's the difference, really. So, okay, Pat, this is a great question. What are your thoughts on Simply Safe dividends? Seems pricey to me. Yeah, man. It's like I was talking to my friend Chris, who's in the Discord group. Which, by the way, if you guys are not in the Discord group, it's awesome. It's a great community of dividend investors. We're up to over 1,400 different investors in the Discord group. It's basically just one big group chat filled with dividend investors. But my friend Chris and I were talking about this, who's in the Discord. We were talking about this the other day. Simply Safe is great. I know a lot of people really like it. My friend Russ, Dapper Dividends, really likes Simply Safe. He uses it in a lot of his videos. It looks like a really great platform to use, but it is very pricey. It's like $500 for the year, and they won't let you do like monthly. You have to pay on an annual basis, from my understanding, and that's just kind of a lot especially when you compare it to something like Seeking Alpha, which is normally $239, but there's a link to that in the description as well. You can get it for half off, making it $119 for the year. So or what comes out to just under $10 a month, but that's way better than spending $500 on Simply Safe dividends. So, it's a good product, but it is very pricey for sure. Jay wants to know, what do you think of the big banks? I think they look good right now. Truth be told, Jay, I have not looked at the big banks lately. So, but I do know, actually, I take that back. I briefly saw something going on with, briefly saw Bank of America. Where is it? Let's go to the watch list. I think Bank of America is still kind of near its 52-week low. Yeah, it's not too far off of it. It's $34 a share. 52-week low is 29. JP Morgan, if we scroll down. Okay, this one's a little bit higher in its 52-week range, $137 per share. So I don't know. As far as valuation, I'm really not too sure. But I don't know. I think it'd be nice to add a bank. I know. So look at the Canadian banks too. The Canadian banks are supposed to be really good. Russ, keep bringing up Russ. Man, he's getting a lot of lip service on my stream tonight. But he just bought a couple of Canadian banks for his portfolio, BMO and TD, Toronto Dominion. But he put them in a Roth IRA so he could avoid the foreign exchange tax or something like that. I don't know exactly what it is. Canadian withholding tax. There's some special tax that you have to pay with Canadian banks that you can avoid if you put them in a Roth IRA. So if you're going to go that route, maybe do that. Put them in a Roth. Okay, Caleb, what is your opinion on JEPQ? It's kind of like JEPI and pays a 16% dividend. I don't know anything about JEPQ. I know it's a covered call ETF. I don't know how it works. I've not looked into it. A 16% dividend is very nice. And I will say I've been pretty happy owning JEPI. Got a nice dividend from them earlier this week, actually. It's the first one to kick off the year. So, man, if it's anything as good as JEPI's been, then I don't know. I have to look into it. Okay. What else we got? We've got about 10 more minutes here in the stream. This is a good margarita. Oh, this is a good question. So, what dividend growth? I think you're asking, what dividend growth do you like to stay at? So, this is a good question, and how do I answer this? So, what dividend growth do you like to stay at? If I'm looking specifically for a high growth dividend stock, I think for me, like 8 or 9% and above is something I would consider like high growth. If you're looking at just a 5-year CAGR, I get really excited about double digits. I've got a couple double-digit dividend growth stocks in my portfolio. Snap-on's one of them. Starbucks, Lowe's. What else do I got? Let me take a look. So, sorry guys, bear with me. Okay, Lowe's. Okay, I forgot about this one. Lowe's, AbbVie, Snap-on, Starbucks. Those are all of my double-digit dividend growth stocks. So 4 of those. So yeah, double digits is nice if you can find it. Charles, it's about time Peanut showed up. Man, guys, I got behind in the chat again. Jeez, I'm like 15 minutes behind. Okay, so Fast Eddie, I'm new to your channel. Do you have a bio video or net worth video? No net worth videos. I did have, I mean, I briefly talk about my bio and my background with investing sporadically throughout my videos. I'm sure there's been one that I've talked about it in depth. I don't remember though. But as far as net worth, like every single month, Eddie, which by the way, thank you for checking out the channel and joining the stream. Every single month, I put one out earlier this month. I put out a portfolio update video where I show you, you know, how big my portfolio is, how much dividend income I brought in, my purchases, and other relevant stuff that happened in the last month in my portfolio. So I put out those videos every month. Additionally, I'll put out a video going through each individual dividend payment I received throughout the month. So I do have those recurring videos that I put out that give you a good idea of how big my portfolio is, what I'm holding, and where that income is coming from and where it's going. So hopefully that helps. I really enjoy making those videos too, by the way. Some of my favorite ones. Okay, Shannon, you have some great questions tonight. I have to screenshot this other one. Okay, so this other question, when starting a dividend account, should I buy a handful of stocks or just a few? I feel like diversity across 10 or so stocks is ideal with an initial investment. So the best, and there's so many different ways to do this, but if you're just starting out, I think for the sake of simplicity and learning the ropes and creating instant diversification, I really think starting off by buying an ETF, or at least making an ETF like the base of your portfolio, is a great way to go. There's a few really great ETFs out there. You've probably researched them already, but VU, the Vanguard S&P 500 ETF, is great. VYM, the Vanguard High Dividend ETF, VTI, the Vanguard Total Market Index ETF, something like that, which tracks the entire stock market. It's got like 4,000 different holdings, so very diversified. And last but not least, in fact, this one's my favorite, SCHD, okay? The Schwab US Dividend Equity ETF. I don't even know if that's what it is, but that's a fantastic ETF. 102 or 103 different holdings, all dividend payers who've been growing their dividends, I think, for at least 10 years. And so, if I was just starting out and if I could go back, what I would do is I would have one ETF. Maybe I probably would do SCHD, me personally. And then if I really wanted to have some individual stocks in addition to that, I'd maybe choose like 2 or 3 individual stocks. So like an SCHD and then, a small handful of individual stocks. And as far as those individual stocks go, because when you're just starting out, you don't know a lot about valuation. There's still a lot to learn, which is okay. I would look for stocks. Maybe I would look to invest maybe in companies that you really have a good grasp on, you understand well. So, for example, if you've got an iPhone, you've got an iMac, you've got an iPad or a MacBook, Apple might be a good one to invest in. If you go to Starbucks every single morning, Starbucks might be a great one to look at. If you shop at Target for groceries or pop in there on the weekends just to browse around, Target might be a bad one, or it might be a good one to look into as well. So that's how I would go about choosing your first individual stocks. And I know, guys, I know valuation is something we should keep in mind, but for someone who's just starting out who hasn't quite learned that stuff yet, I think it's okay to look for these stocks that are well within your circle of competence, because really that's where we should stay, right? Within that circle. And the best place to look is companies that you regularly use. Procter & Gamble, another one. If you use Tide dish soap, Crest toothpaste, Tide laundry detergent, Crest toothpaste, Dawn dish soap. What else they got? Tons of other stuff. I think Old Spice. They own Old Spice too. I think. Could have that wrong. But so many things. So there's some great companies out there to look at. Hershey's is another great one. I saw Steven said Mars Chocolate, but they're a private company. But Hershey's another good one. So, okay, guys, about 5 minutes left. I got to catch up in the live chat. I'm so sorry that I got behind again. Let's see. Big Dipper, good to see you in here. Better late than never, my friend. Cheers to you, sipping your whiskey Coke over there. Thanks for joining. Happy to see you. Let's see. Guys, this live stream is popping tonight. Live streams they've been really good lately. We've had a good turnout. I really appreciate you guys coming and hanging out with me every week. I say this every Dividend Happy Hour, but yeah, I really appreciate you guys doing this. So Jake, this is a good question. What do you do as your career outside of YouTube? So, man, I've been very fortunate. I just, within the last few months, started doing YouTube full time. And when I first started doing it back, I think October was my first full month doing YouTube stuff full time. And for me, it was a question of whether or not, I didn't plan to do that so soon, by the way, but it happened. And for me, it was a question of whether or not it was going to be sustainable. And so I told myself I've got enough cash to I have enough cash. So got a good emergency fund saved up. I'm making enough from the channel to at least pay my bills and a little bit extra. But I still wanted to see October, November, December. If I just stuck with it for those 3 months, how would that impact the channel's growth, the revenue? Could I make it sustainable and keep doing it full time? I figured worst case scenario, I just go get a part-time job outside of that. But, for those 3 months, just being completely transparent with you guys, and it's all thanks to you guys too, just all of your support. It's just gone like this every month since September, October, November, and December in all aspects, views, subscribers, revenue. It's gone up all 4 months, and I'm so thankful for that. Usually the end of the year are like October through December are better months anyway, so we'll see how January goes. But yeah, it's so far it just every month has been better than the month before since doing this full time, and I'm still just kind of taking it month by month to see if it's sustainable. But if it keeps going the way that it has been, I should be able to keep doing it full time. That's my goal. I really love doing this. I'm very fortunate to have this opportunity, and yeah, I don't know. Hopefully that answers your question. I feel like I could talk about this all night, and it's still like I have to pinch myself that this is the reality for now. But we'll see what happens. Like I said, I'm just going to take it month by month and see how the channel grows and see what the money's looking like. But we're in a great spot right now. So thank you guys for all of your support. I mean, it doesn't help or it doesn't hurt too. Like Matt Money says that I'm a trillionaire outside of this. So just kidding, guys. Just kidding. Yeah, Professor says, Peanut is in the back room trading on M1 Finance. For sure he is. He's crushing it. So anyway, I think this is a pretty good place to wrap it up, guys. Sorry, I'm just catching up in the thing real quick. Jake, good for you going full time. You have a good vibe, so I'm sure you'll grow. Didn't hit my 50K goal by Christmas, but I'm still barely ahead of you, but you're beating me in dividends. Man, well, thank you so much for saying that, by the way. But dude, you'll hit 50K this year, no doubt. I think we both will, no doubt about it. That's the good thing about this style of investing. I always say it, but no matter what your investing goals are, whether it's portfolio value or it's dividend income, you want to hit 1K in income or 1,500 or 2,400, whatever it is. It's not a matter of if you're going to hit it. It's inevitable if you just keep staying consistent, if you keep contributing to your portfolio, you're bound to hit those goals, whatever they are, especially considering a lot of the companies it seems like many of us invest in are ones that have a solid track record of not only paying their dividends, but growing them as well, which obviously is going to help you hit those goals even faster. So that's the great thing about dividend investing. It's and we all know this, like I'm not saying anything new here. It's slow to get going. And, I think a lot of people they're kind of turned off by dividend investing because and I get it. It's hard to get excited about something that's going to take like 20 years really to see the results from, right? So I get why people wouldn't want to, I get why it's hard for people to start doing this, but my goodness, once you do and get the ball rolling and stay consistent, like I said, it grows, and it actually grows it actually grows quicker than you think. Like, for example, I started doing this maybe 3 years ago now, somewhere in that range, about 3 years ago. And, I had some money in my portfolio. I had maybe in total about maybe about 10 to 15,000 in total, and $0 of dividend income. I was not a dividend investor. But in that time, in those 3 years, I basically have gone from $0 in dividends to averaging over like $150 a month, which obviously I'm not going to retire off that, but man, it's a lot farther than I thought I'd be. And $150 is also not nothing. And back in November, I had my first $200 month. So it's starting to get up there. I'm really excited to see what this year brings too. I'm hoping that I could make that $200 on average every month, get to $2,400 in dividend income. But we'll see what happens. It really, if it's not this year, it's next year for sure. Like I said, it's a matter of when, not if. So with that, I'll leave you guys with that. So keep up the great work, all of you guys. I'm not going to sign off just yet. There's a couple comments still, but yeah, keep up the great work, guys. Just keep investing. And sometimes it feels like it's going slow, but if you look back on things, I think you'll realize you're farther along now today than you were this time 6 months ago or this time a year ago. And if you're just starting investing, like even just by making the decision to start investing, it's like you're already ahead of where you were. So good job there. And Aaliyah, thank you so much for the compliment. I like your channel because you're humble and classy. I don't know about classy here in my blue hoodie, but I really appreciate the compliment. And like I said, I appreciate you guys. Really appreciate you guys supporting me here on the channel. It means a lot. And hopefully we can keep this party going. If you guys keep watching, I'll keep making these videos. How does that sound? That's a good deal to me. And Ron here says, just don't push coupon codes, Ryan. Well, Ron, actually, I think there's some things that are worth pushing. Like I've had a couple sponsorships on my channel. Nothing that I think sketchy. Like I definitely try and talk about things that are going to be of value to the audience. But I really don't think if you do it ethically, there's anything wrong with having sponsorships or being an affiliate. Like, for example, I'm an affiliate with Seeking Alpha. Use it in every single one of my videos. A lot of you guys use it. And I feel really good about talking about products like that actually help us to do what we do better. So, I actually, at least, how do I say this? This is an important thing. I want to go. I need to get off, but this is actually important. I think there's a lot of people who, especially as of late with all the stuff that happened with FTX and what have you, a lot of people just get turned off by people, creators promoting things in general. Don't like it. And as soon as someone starts promoting something or has a sponsorship or an affiliate or even starts a Patreon, like they kind of get patronized for it, which truthfully I don't understand. And there's going to be times, just full disclosure, where I'm promoting things, whether it's sponsorships or Seeking Alpha affiliates or even my own spreadsheet for free, like I did earlier tonight. And at the same time, like, got to make a living somehow. But that's not to say that one should be just promoting super sketchy things for sure. And so, my goal is in doing these things, if ever I do have promotions or sponsorships or whatever, it's to keep it ethical. That's really my goal here. I think of this as a long-term game, just much like dividend investing. Building a YouTube channel, specifically a YouTube channel talking about dividend investing, it's a slow burn. And I do have a long-term perspective with this. And so, just keeping it frank, I'll try my best to. only talk about things that will bring you guys value, because that's what it's really all about. But anyway, like I said, I could talk about this all night. I'm going to get out of your guys' hair, but thank you once again so much for your support. Thank you guys so much for watching and tuning in for another awesome Dividend Happy Hour. This was fantastic. I hope you guys have a fantastic weekend. Okay, keep up the great work, and I'll see you in the next one. I'll see you next week. Actually, Sunday's video. I will see you guys in Sunday's video for the big reveal. I added a stock to my portfolio, and this is going to be the big reveal. So definitely check that one out. Okay, I'll see you guys in the next one.